afternoon. This is Chris Brecher with a Simpler Stocks free video for September 13th, 2016. So you can see it's about 46 minutes before the bell. What a difference a day makes today. The SPES is up 36. You know what the tip-off was? When this came out this morning. Atlanta Fed chiefs not talking about rate hike, saying financial markets seem to be very sensitive to Fed remarks by Fed speakers at the moment. Why does the Fed care about the market? Unbelievable, but the second I saw that, I'm like, that's it. We're probably going up. So right now, yeah, the ES is up 36 here. NASDAQ up 92. Russell up 18. A lot of these taking back a lot more than half of what happened on Friday. So all this stuff, you're going to hear 62.5 retracement or 31.68, whatever pi is. Just worry about that. We've rallied above certain ATR trailing stops, and until that changes, we're not going to go down. YM's up 282. That's actually the futures for the Dow Jones Industrials. Bonds still down 3. The key isn't the bonds here. It's the actual notes of a lot of foreign indexes that their yields dropped sharply. Check out the JGBD here, which is the thing betting on Japanese rates going up. I told you it got a little extended. Told you it was a nice little, let me put it up here so you can see it. Not only was it extended on a daily and extended on a weekly, look at that negative divergence right there. Right there in here. And it looked like it could go right down to support, which is right where I bought it, right at 1440 in here. Maybe a little early, but that's where I got in. But this basically says the yields in Japan dropped sharply. Why did we sell off the last couple of days? Because the yields in a lot of foreign markets went up sharply. So this is a normal reaction. Let me show you something else that I find fascinating. I put in here on my email alerts. When you do your $7 trial, you get stock trades and chart ideas, index and futures charts, and unusual option activity that I send email alerts. You get other things too. You get the chat room in the morning. You get a premium video that's a lot more in depth than this, and a message board type forum where we communicate back and forth together, really active forum. But the reason I'm showing the email alerts is I showed this and I showed some world bond charts. Everybody fretting watching the Japanese bond rates do this. What people don't realize in here, and this is the 10-year Japanese Treasury yield, go on a bigger perspective and you see how low it's been. But there's one thing you're missing. It's forming an inverse head and shoulders. The key on here, though, is usually it comes down in this area before it goes up. It's already, like I showed you with the ETF, it's already drastically overbought, and that's exactly what we're getting now, is we're getting a little bit of that overbought sell-off in here, and that's why I bought it in this support zone right here. So we'll see what happens with that. But what do I think now? You got to look. Bonds still not doing much, long-term bonds. This is a nice rally off of major support. Go and look at the SPX and go and put it on a weekly. Everything I interpreted over the weekend, I had to say, look at all the support. That's where it's going to stop. And guess what? It stopped right at those areas, which is sort of cool. So that's exactly there. Interesting, though, is the NDX didn't stop at anything. It just stopped. Not a lot of support, not a lot of anything, but it stopped totally, just reversed. Now, I don't know why, except that it keyed off the SPX. But just understand, over here on the left, there's this little air hole down to 4,600. So I'm still not set that we're not going to go down there in the future. So I hope everybody enjoys this video. Like I said, we have the $7 30-day trial, and we've had thousands of people sign up for it, and we have one of the highest retention rates in the industry. Like I said, we're going to be a lot more in depth on the premium side, showing where we're going to be trading the next couple of days. I hope you can join us. Take care.